Hey, everybody, and welcome to the Four Female Founders podcast series where we're helping women in business learn to thrive, not just survive. I am your host, Sarah Bundy, and today my guest is Julia Chung. She is the co founder and CEO of springplans.ca. She's an author, an advisor, and a serial entrepreneur. Not only that, but she's actually also the chair of the Financial Planning Association of Canada and on the board of directors for Family Enterprise Canada. Julia, welcome to the show.
Thanks so much for having me. I'm really excited to chat with you.
Yes, likewise. And I actually feel very happy and blessed that we've actually known each other for many, many years. And I've actually got to see your journey as well as you see mine, rewind 15 years or so. And it's cool to see kind of how far both of us have come. But the purpose of our show today is actually talk about all things finance. We're going to talk about cash flow management. We're going to talk about the best ways to do budgeting for businesses. We're going to talk about how to plan for your future, how to balance budgets between personal needs and business needs, and ultimately how to get your company ready to exit in the end. So, Julia, you ready to jump in?
Yeah, let's do it.
Let's do it. All right. Well, please tell us a little bit about your background first, and how you got into finance and what it is that you do today, so that we have a good understanding of where you're coming from.
Gosh, that's a long story. How do I make it short? So, I started in finance actually just at the reception desk of a major investment counseling firm, and I was looking for a good steady job. I was a single mom, and I needed something that made a lot of sense and worked for me. And I had a really, really great boss there who looked at me and said, "You're kind of bright," and he really pushed me forward. He did more than mentor me. He definitely sponsored me, and he got me, education, got me promoted, and I ended up working in a large variety of fields in finance because I get bored really easily. So I went from working on a equity trade desk to becoming what back in the day they called a stockbroker, and then moving into getting insurance licensed, and then transitioning into holistic financial planning, working inside an accounting firm. And I started my advice only financial planning practice back in 2012. Um, and yeah, from there, I've done lots of things, grown lots of ways. I have far too many letters behind my name.
and you just happen to be the chair of the Financial Planning Association of Canada,
Yeah, which I helped
which
co-found.
is kind of a huge deal. So,
I got roped into it. It's a
um,
volunteer position.
that's okay. That's okay. It's still a position that requires a lot of expertise and a lot of responsibility. So,
Does.
let's talk a little bit about businesses and how they need to get structured in the beginning when they're getting set up. So, when you're thinking about finances, you're thinking about the right type of um, allocation of budgets,
Yeah.
even thinking about taxes, thinking about insurance. Like, what do people need to think about when they're getting their companies set up for success from a financial perspective?
So many things, all the things, too many things, usually. I think there's a lot of things that people don't realize are very, very different when it comes to running your business versus being an employee. A lot of times we say, I'm very good at my job. I could go out there and run my own business and I'll make all the money, not just the salary portion. But I think what a lot of people don't realize is that it's a crash course in operating a business. You do end up spending a lot of your time running a business, not doing the thing. And on the finance side of things, there's a lot of things you want to prepare. Some people really feel like if you're in the type of business where I am the whole business, they tend to commingle the finances, right? Oh, I'll just put it on my personal card. It's, maybe I'm not incorporated, so it's all going through my personal bank account anyways. I can do my own bookkeeping. Please don't do those things. So the key thing is have separate finances. And you want to have not just a business account but a business credit card, and you want to keep things really, really separate. And I know a lot of times we have to, especially in the beginning, cross things over, but keep them as separate as possible so you can track it later, because trust me, whoever's managing your taxes at the end of the year is going to charge you a lot more if you don't have this right. So set that up from the beginning. One of the biggest mistakes that I always see with business owners is even if they do that, they'll have like one business banking account and one business credit card. The money comes in, they're like, yay, great. And then the money goes out. And then they file their taxes at the end of the year, and there's sales tax that they didn't remit, and there's income taxes that they have to pay. So the best thing you can do is as soon as you receive some income, you have another account that the sales taxes that are involved go right into automatically. That's not yours. And an estimate of how much income tax you might be paying automatically. That's not yours. And then how much you're going to pay yourself goes out to your personal account. And again, automatically. And if you can set up those systems so they move automatically, it's much clearer for you to know what's available to spend and float your business with.
Thanks to CJ for sponsoring this episode of the For Female Founders podcast series and for supporting our mission to help, mentor, and elevate women in business. Yeah, I think that's amazing advice and something that I imagine the vast majority of people overlook and then backpedal when it comes to time of either paying taxes, trying to exit, trying to bring on a partner, just how to invest. And to your point, paying taxes sneaks up on people, right?
All the
So
time.
if they're not planning for it throughout the course of the year, you're getting dinged with a really big bill that you were not prepared to pay if you weren't planning throughout the course of the year.
And it can really mess up how you take your income. So a lot of times people, especially in the beginning, they're like, am I going to take wages, salary, dividends, those sorts of things from if it is set up as a corporation? If you aren't thinking about that from the beginning, then you'll always be backfilling, paying last year's taxes with this year's income, and that just like this terrible cycle ends up happening. So if you can plan ahead and really think about it, even if you're like, I don't know what this year will bring, that's okay. Let's build a structure and then check in on it very regularly. Does this still work?
Is that something that you can help people with, Julia? Because I imagine lots of people immediately listening to this are like, how do I even do that? I have so many questions. Can you help people?
Yeah, I definitely help people with that kind of thing, exactly. But your accountant ideally should be able to help you at least sort out kind of the initial things. Very often, accountants are not going to give you really good structural management advice with your business. Some of them are, but a lot of them aren't. And a lot of them are just really thinking about the year end. So you can ask them things like, what rate of tax should I think about applying to this so that I know how much to put in the other account? How does sales tax work where I live? How does that, how are those sales taxes impacted if I'm working with someone outside of my specific jurisdiction? Get that information from your accountant.
That's good advice. And just going back to this idea of setting up different accounts, money comes in, you have automated payments where you pay yourself into your personal account, you have some automated payment that goes into your tax planning. Is that all done through the bank? Like, how does someone actually set up all those automations and all those little different systems?
Yes, most banking systems will allow you to do this online, and it's like fundamentally an old school idea of the envelope system. Back when people got paid in cash, you'd take your money and you'd say, "Oh, this is the envelope for my groceries. This is the one for my rent." And you just use what's in the envelope. All you're doing is setting that up digitally. Most banks will allow you to do this, and the fun thing is that a lot of them don't charge you for a savings account, right? They're paying you interest on your savings account. So for those kind of things that you are not paying out until the end of the year, very often like taxes or maybe quarterly tax installments on sales tax or whatever, you can put those in savings accounts, and you should be able to set up automated systems.
Let's talk a little bit about the numbers that matter the most when you're an entrepreneur, when you're a business owner, you're trying to figure out how to pay yourself, your employees, where do you put the money, how is cash being managed? What are the recommendations or things that entrepreneurs need to be thinking about in regards to cash flow management?
It's one of the least complex parts of financial planning, but it's also the hardest. Whether it's personal or business, we're not very good at understanding how much cash flow changes. Most people can wrap their heads around 1 month of income and expenses, but it's really hard to think about what's going to happen, 3 months from now, 6 months from now, 1 year from now. If you're, looking at business plans and you've been talking to mentors, they're often asking you about your 5 year plan or your 3 year plan. You need one of those for cash flow. You need to like plot out, okay, these are what regular expenses are going to look like. These are the submissions I'm going to have to make on sales tax and income tax. This is my annual cost of liability insurance if you pay it that way. Oh, I think I have an expense that's going to come up, or I'm making an investment in this. And what I love about a year-long cash flow plan, because I'm such a nerd, is that when you're if you've got this set up in a really effective way, then you've got budgets, and something comes along and you say, ooh, I need to spend money on that because it makes really good sense for my business. Maybe there's a conference, maybe you're going to do some digital marketing, who knows? Um, if you haven't plotted it out in your cash flow plan, then you can go out there and test it. And you can say, okay, what would the impact be? And then you know whether or not you can afford it. This long-term plan also tells you how much money you want to have in buffer. Just an emergency savings account for your business. So I'm a big fan of emergency savings accounts in general. Most of us financial planning people are. And, you know, risk taking entrepreneurs are like, it'll be fine, which I also respect. But I really think it's important, especially if you're very new to your business. If like you're starting up in the beginning, you should have about a year of expenses, both personally and business wise. Where's it going to come from? And 1 year always feels really good. The first year in business, as my dad told me a long time ago, you don't have specific hopes and dreams. You're just hoping this will work. You've got some savings. You get to the end of the year, and maybe you've run through it, but it's working. Everything's kind of working, and then year two happens, and it all falls apart. You've picked all the low hanging fruit off the trees. People still aren't listening to you because you've only been in business for a year. That second year is usually an absolute dumpster fire. And so you had better be ready for year two in whatever iteration of your business to be trash. Where's the money going to come from? You don't need 1 year to get up and running. You need 2 years.
Yeah, and sometimes you need 3 years. I
Sometimes
find
two.
that, for it, that's why I think a lot of people consider startups the first 5 years,
Yeah,
right? Because you're trying to figure out who are your customers, where are you going to get money from, how do you compete in the market when you're new, you don't have the clout yet, you don't have the history,
exactly.
right? How are you going to differentiate? And then how do you get enough volume and scale to be able to actually get the business to the next level? So isn't just one person running it, but now you can create a structure, you can hire a team, you can invest in marketing.
Yeah.
And that's a tipping point. It takes time to do all those things.
And it's expensive. And like, really, you're experimenting the whole time. And experiments cost money because not all experiments are going to win. And I think people, I mean, the only reason why you'd go into business is because you're a little bit delusional and optimistic about what's going to happen. So people are like, this is going to be great. This is my bright, sunny future. And I love that because that's the only reason you do it. But also, let's imagine something that doesn't work out so well, and let's think about how we're going to manage it if it does fall apart. And then there's other things that a lot of times business owners don't think about, like how much time off could I actually get? If you don't invest in paying for your time off, you will burn out, and your business exactly follows the trajectory of your energy. Don't imagine that it's going to act separately.
Been there, done that. Yeah.
Yeah. I mean, that was one of
Totally
my
get it.
biggest surprises. I remember at one point when I was operating two businesses at the same time, because why wouldn't you? Um, I had good ideas.
While you're parenting at the same time, don't forget that part.
Exactly. And I was like, oh, weird. I thought these two businesses would act like a diversified portfolio, and one would kind of be up while the other was down, and, would require different sorts of energy from me. And then I realized they operated exactly the same trajectory that I did. No matter what, it was always where I was at. And so that time
Mm.
for managing your own energy, making sure you eat and exercise. And I know nobody does this properly in the first couple of years, but I'm just saying it anyways. you know, you need to set aside that time, because if you don't, a lot of times what falls apart for a business owner is themselves. It's not your idea,
That's right.
it's not your structure, it's not your money, it's you. And so you need to build that into your financial systems, is how to take care of yourself.
I love that so much. And I think a lot of entrepreneurs want to, they have the intention to do those things. But one of the roadblocks often that I find is that they don't know what tools and systems to use to do those things. So in my case, for example, I schedule all of my life in my Google Calendar, including my gardening hours, my workout hours, the time it takes me to drive my kids to and from school. I block that off.
Yes.
And that's that time focused on those things. That's a tool, right? To be able to use those. What are some of the tools and systems that you recommend entrepreneurs use as they think about their financial planning or their budgeting or balancing personal and business cash flow management? Can everyone live out of a spreadsheet or do we need something else?
Well, first of all, time blocking, what you were just talking about, I would be lost without it. I would also be absolutely lost without having an executive assistant. And a lot of times people do not invest in that particular staff member for a long time. And they're like, people like it better when I manage my own calendar. People don't care. People do not care if you're the one booking the meeting or not. That you should spend your time on the things that make you money. And one of the things that I've seen business owners do is spend a lot of time on administration because it's important to the business. But actually, what they should be doing is business development, and that is scary. So it seems really easy to do the admin stuff. And they're like, but I'm still doing business. I still get straight A's. No, you're not. Give the business to somebody else. I know that's not necessarily financial, but I think that's important to have that in the budget, is recognizing what it is that you are good at. If your job is to bring in the money, spend your time bringing in the money. Budget for the people who are going to do the administrative things. They're important, they're valuable, they're not what you do. And you need to build out a structure for that. Now, if you don't love spreadsheets, which I absolutely appreciate because it can be very
Right.
boring, what you need is a really good bookkeeping system. A bookkeeping system that is kept up to date. And there's some good online ones. You'll know all the names. I'm not going to advertise for somebody else, but there's some really good
Yeah.
online ones that will tell you where you're at. And if you have a good administrator or bookkeeper, you can tell them, what information am I looking for? What do I need to know? And it'll be things like, what's our actual profit? People pay a lot of attention to revenue and not much to profit. So let's pay attention to profit.
Mhm.
Where are we spending our money? Are we on budget? Are we not on budget? Do we have enough in our various accounts? What's our actual timeline? If we think that we're going to spend at this rate and we're going to earn at this rate, then we think the business is going to last this long. But if we earn no more money, how long will we last? These are things that you want to know. Have the people that you work with who are good at this pull that information for you. And in the beginning, monthly. After you feel like you're settled and you're doing a really good job and you've been in business for a while and you've got some padding, quarterly definitely works. But you have to be checking in on this all the time. And even if you're not a numbers person, and I have opinions about how women feel about that, um, even if you're not a numbers person or any of this scares you, get somebody to teach you. This stuff is actually not hard. You are good at it. Women are very good with numbers. Um, you can learn how to do this. You will have this control over your life that is so, so important. My mom was a business administration professor and a strident feminist, and her call to arms for women was always pay attention to the money.
Yeah.
You want to support women, you want to empower women, money.
That's an absolutely fantastic advice. And to your point, something that a lot of people overlook, a lot of people shy away from, especially women, especially when it comes to finances and cash flow management. And it's really about financial literacy, right? Understanding, taking the time to just really understand how money works.
Yes.
It's not only essential for the success of your business, but for your future, for your family, for your comfort in your retirement years, to make sure that you can move into wealth And this is why we have these conversations. This is why the tagline of this podcast is helping women in business thrive, not just survive, because a lot of women don't know how to manage all of the things that they could be investing in, uh, levers that they could be pulling to help them move into that thrive mode, to move into wealth, to move into large, reputable businesses that are extremely profitable, that end up exiting for multiples of, profits. And women have just as much opportunity to do those things as men. They just have to double down and learn how to speak the language and what the numbers actually mean.
And speaking of language, if you were talking to a financial professional and during that conversation you feel stupid, that's their fault. That is not you. It is the responsibility of your financial advisors, whether they're accountants, lawyers, investment people, insurance people. Their job is to educate you. If they are speaking in jargon or they are talking down to you, you need to leave. This is the wrong person for you. They are bad at their job. Our job as financial advisors, I think, is to educate and advocate. That's the job. If someone's not doing that for you, you need to walk away from them.
Mm-hmm. And so let's talk a little bit about at least some of the basic terms that people need to be paying attention to in their business and in their personal lives. So you had mentioned, people are paying attention to revenue, but they're not necessarily paying attention to
Yeah.
profits. Profits equals cash flow, right? So that's basically the extra cash you have at the end of the day once you've brought in all of the revenue you can and you've paid all the bills that you need to pay. What's left over at the end, right?
Yeah.
And so, for people who are looking to build their companies, let's talk about why that's important and what other metrics people should be paying attention to.
Yeah, it's funny because so my dad's a serial entrepreneur. We come from a very business minded family, and he is not good at finances, but he's good at running businesses. And the one thing that he always stuck to, knowing that he's not a finance guy, was cash flow. Cash flow is everything. If you don't know anything else about what's happening in your business, know the cash flow. Know how much money you have, how much money you spend, where's your next money coming from in the next 90 days. Like I've even got kind of a tool that I do use that I work on probably once a month that says, where's the money coming from in the next 90 days? Where's the money going to in the next 90 days? Those are kinds of the reviews that we want to do. So even if you hear words like EBITDA and that kind of stuff, you don't need to worry about EBITDA, earnings before, uh, anyways, you don't care.
Interest, taxes,
You,
depreciation,
yeah,
amortization.
all that kind of stuff. You don't care about that unless you are actively selling your business. And then that's still a number that your accountant is going to calculate for you. So, in the active operation of your business, not super important unless you're running a major corporation that's traded publicly. So if you're running a small business and it's you are concentrating on cash flow, you're concentrating on income taxes, where's the money coming from, where's it going to? It is okay to spend money on your business, but when you're making a decision about spending money on your business, you better calculate for yourself, what is the expected return on that? Am I willing to lose 100% of this money? Do I need to get 100% of it back? And remember to calculate your time as money as well. It's really, really
Mm-hmm.
important. Again, we need to focus our time effectively on the right things. So there's lots of jargon and terms. I think one of the things that has always kind of bothered me in the last couple of years with the rise of VC capital and that kind of stuff, that people are paying more attention to how much they raised in Series A and Series B than how much money the company was making. And I would
Mm-hmm.
have this conversation with people and they'd be like, oh, it's different because this is tech. And I was like, but I remember the tech wreck. That was the beginning of my career in finance, was the tech wreck, when everybody told me that technology businesses are different. They don't need business plans or profit. I don't understand. And then we had a 3-year market crash. So I think they're wrong. If somebody tells you that what's important is equity financing and debt, that's wrong. That's not a successful business. A successful business is about your cash flow and your profit, nothing else.
That's it. And actually, people who invest in stocks, the stock market, they get really good at identifying which types of companies have a healthy cash flow line,
Yeah.
healthy profit margin at the end. And, it's a big variable in value investing,
It absolutely is.
right?
When people are looking at something to invest in, they are looking at the company's profit and loss statement. Did they make money? How long have they made money for? They are looking at your balance sheet. Who owns this company? Are there shareholder loans? Is there debt against that sort of thing? What's going on? And then they start looking at who's making the decisions. So if you're looking at your own business and you're trying to determine the health, of course, start with cash flow. But as you get to the end of the year, and hopefully you have a great accountant and a good bookkeeper, and you're producing these things, profit and loss statements and balance sheets, these are the information that you're going to look for. So I had a very good friend years ago who came to me when she got a job as a CFO in a major organization. And she was like, I am terrified because I don't actually know how to read the financial statements, which I thought was interesting for a CFO. She went on to do a really good job. But when I talked to her about this, because she's somebody who's artistic, she's a great writer, I said, this is a story. Your profit and loss statements, your balance sheets, this is a story. What I want you to look for is, what is the story that is being told by this statement? So numbers, 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 sure. But what's the story? Is this a profitable business? Is this a business that's working towards profitability? Where are they spending their money? Where's the money coming from? Right? So a lot of times we have an idea that a certain product line, service line, type of customer is where our money's coming from. But do you know? You should know those things, because that's going to inform everything else that you're doing, and where you're spending the money. What's the return on that? So a lot of people will use acronyms like ROI, return on investment. So what is the return on your investment? Are you spending a lot of money in this one particular area? Maybe you have really great staff and you like them very much, but you're spending more money on them than you're getting out of them, and you might have to make a tough decision there. So what is the story of your business? You might look at all the money that you're spending on software programs and like, am I using all of those? Is this actually turning around something effective? And then your balance sheet will just really tell you where you're at. How much money do we have in the pot, in our savings accounts? What's outstanding in accounts payable? Accounts payable is really important when it comes to cash flow. Make sure you've got a really good system to get paid quickly. People forget about that and they feel bad about chasing people. Chase them. Get your money.
Yeah, because again, it goes back to, you need cash in the bank. It's about getting the actual money
Yes.
to you in your pocket, in your bank account, so that you can pay your bills, so you can pay yourself, so you can plan for end of year taxes, so that you can exit, so you can retire, all of the things. So if you're not getting paid, that's on you.
Yeah, but people feel uncomfortable, and people feel uncomfortable pricing appropriately, and people feel uncomfortable, actually giving somebody an invoice. And if this is actually heart-wrenching for you and very, very hard, get somebody else to send the bills. Get somebody else to
Right.
chase the customer. It's fine. Just make sure it gets done.
Absolutely. So let's say a company, a CEO, an entrepreneur has their systems in place. They've got their forecast, they've got their 90-day forecast or their 12-month forecast. They have a good idea of where they know, I want to say good idea, they know exactly where their money is coming from and where their money is going. They've done their diligence to reduce costs if they're overspending, because at the end of the day, they need to get to profits, which is cash flow. And now they have a business that is profitable. We've got cash. Yay! We have a successful business. We are officially a profitable business. Now we need to scale, right? And some people are going to want to exit. Some people might want to pass it on to their kids. Some people might want to donate their company. Some people might want to shut it down. I don't know. There's lots of different things that people like to do with their
Yeah.
businesses. But let's say people are trying to build their companies to be able to get acquired, and they need to prepare for an exit. What are the things they need to do and think about to get ready for that very big milestone in their business?
One thing to remember is that you will always exit your business. So for all the people who are like, I'm going to work forever, guess what? You're not going to live forever. So you will always exit your business. So you need to always be thinking about the exit. Now, if you are preparing something to get acquired, you're going to sell it to somebody, the first and most important non-financial thing, honestly, is what is your business without you? How does this operation run if you are not there? If it does not, you do not have a saleable business, just full stop. And that is the first and most important thing you can do with your business. If you can start from the beginning, because you're like, I'm going to exit this business eventually, knowing that you want to sell it to somebody at some point, you should always be building for you to leave that business, which means that you have to have incredible systems, written procedures. I don't know why this is missing from so many places. Written procedures, understandable structure, good people, but also people in jobs that could be replaced. Because good people, they move on. So, what does that job look like? Do you understand it? Do they understand it? Again, is it written down? Is there a really, really good system? If someone were to walk into this tomorrow, could they just take the keys from you and say, thanks, see ya, and still run fundamentally the same business? Then you have a saleable business. So, if you've got that, then the next thing you want to look at is structure. So, is this structured for sale in a tax efficient way? Depending on where you live and what the rules are, it's going to be different what kind of strategies and structures to take you out of that. But what I would say is at least bare minimum 2 years. I'd really love to see 5 years. Have that structural conversation with lawyers, accountants, tax people. Say, how can I organize the way this company is owned so that it transitions really well? Someone's going to want to buy the shares in the company and not necessarily just the assets of the company, because that's generally better for you. Make sure that all the things are cleaned up structurally. Make sure that you have really clean bill of health from your tax authority. So if somebody's taking on the risk of your company, they look at it and say the risk is pretty limited. You've got healthy clients, you've got great resources. Then you're able to work on the strategy to move that out.
So, in other words, make sure you're out of the weeds. As the founder and as the business owner, you should not have to be the person relied upon for the make or break of your company. So, you got to get out of the weeds, which is building your systems, building your processes, building your structures, having good people in place who can execute on the job. And it's almost like a product. It's a packaged product. Someone can buy a packaged product, pay you a bunch of money for it, and then they can go be successful with the product that you've built.
Exactly. And before you agree to a price, so maybe, you get a valuation done on your business and your business valuator says, this business is worth X, and somebody who's good at selling businesses is like, I think there's a market and you could get between X and Y. That might sound like a really big number and you might be super excited, but you don't know if that's actually the number that's going to get you where you want to go. And so this is a really big missing piece I often find with business owners is they're like, yay, X million dollars. I am going to, I don't know, move to the south of France and, everything's going to be fine forever. And then in a couple of years, they realize that they actually can't maintain the lifestyle that they have or that they want because it turns out that X million dollars doesn't pay for that, which ends up being really shocking. So before you do that, get the valuation, get set up, make sure your business is in good shape, and then talk to a professional financial planner who's going to look at what do you want in your life? What's going to make your life fun and happy? How much do we think that's going to cost? Where would we put this money when we receive it? How would we invest it? What sort of rates of return do we need? How would we protect it? All those kinds of things. And then that person should be able to tell you what your number is. And it might be that what you can get for your business is $5 million and what you really need is $7 million. Great. Now you've got however long you've decided you're willing to put into this business to grow it to a $7 million company. Or you can say, no, I'm willing to sell it at 5. And I also know that I could work in consulting for X number of years, and that'll make me happy, and I'm still going to achieve what I want. But you need to figure those out before you do the sale, because I've seen so many business owners get to that bad place and they're like, oh, this sucks now. I shouldn't have sold it.
Yeah, disappointed in the end. They didn't have the foresight. And that's why it's so important to work with people who can advise you and who have that foresight and the experience and the perspective that's going to help people make the right decisions. You put so much blood, sweat, and tears into your business, and the last thing you want to do is shut it down or exit it too soon when, you know, it gives you a different life than what you expect in the end. So
Yeah.
thank you, Julia. Love that you've been able to share all these things. We are at time, but before we go, could you leave us? Let's just position it this way. We've got some people who are listening who are starting their businesses today. We've got some people who are listening who are sort of in the middle of it. They're scaling their businesses. They're trying to grow. They haven't thought about exiting yet. And we've got some people in their cycle who are thinking about exiting today. So, final words of wisdom. Regardless of the stage they're at in their business, what are some last thoughts? Things that they can act on today that are going to help them be successful in the year to come. Do these 3 things.
Focus on cash flow and profit. Make sure your business can run without you. And invest in yourself. As long as you are the powerhouse driver of your business, you do need to take care of this body and mind that you have. And most people are terrible at that. It is worth it to spend the money, even if it feels a little tight, on things like personal trainers and healthcare and taking vacations. If you can't take a vacation from your business, I guarantee you can't sell it.
That's great. 3 good tips. Final resources. Do you have any books that you would recommend people read? I know you just actually finished working on a book yourself. Which one was that? And what should people look up?
Yeah, the new book is Funding a New Business for Dummies. It is written by Mark Butler and Eric Buteau. I was the technical editor on that, so helped provide them with making sure what they were saying made a lot of sense. So that's just been released in the last month. And I have also written 3 very small ebooks, which are free and available. One is called Women in Money, and you can find it at my website at springplans.ca. It's a little outdated, but it still works. And then there are 2 ebooks that you can find at adminslayer.com, which is a business that I exited. And they are called The Entrepreneur's Survival Guide and The Art of Delegation.
Love it so much. Well, thank you, Julia, for being here. We appreciate you. Thank you for sharing your knowledge, your expertise, your guidance. And if anybody has any questions, feel free to comment below. This is going to be available online and in audio format. And, you know, Julia and team can always pop in there, reach out, answer some questions online. So let us know what you need. And again, thanks so much, Julia. We appreciate you.
Thanks so much for having me. This is really fun.
Take care. Thanks for listening to the 4 Female Founders podcast series. If you enjoyed this episode, please go ahead and hit subscribe, like, or comment below so we can continue to support women in business by helping them thrive, not just survive. We'll see you on the next show.